This is actually my first video under my new YouTube channel. YouTube channel is called The Backseat Economist, and that name basically stems from the fact that I love economics. I have a bachelor's in it, but a bachelor's degree these days, you're basically an amateur. So backseat economist. I'm an amateur economist, but I enjoy it. It's a few passions that I have in life. It's one of them. And I enjoy all things finance. And that's kind of what led to the creation of my new company, Bay Life Brokerage, which is a life insurance, annuity, and life settlement brokerage. And I literally just created that about last week. So this is my first video under my new YouTube channel and my first video upon the creation of my new company, Bay Life Brokerage. And the link to my new website should be at the bottom of the page there. I just wanted to introduce myself, Austin Lewis, Bay Life Brokerage owner, managing broker. I've been in the business for going up on a decade now as a financial representative, mainly with a big time company, Transamerica Financial. And I did everything from setting up retirement plans to life insurance, long-term care insurance, indexed annuities. Runs the gamut as far as financial instruments that I was using to help my clients. The creation of the company really came about at the beginning of the year. I'm also in the Army National Guard. This is just by coincidence that I'm wearing this, but half my clothes are literally Army National Guard because I'm too cheap to go buy real clothes, and so I just basically mooch off the free recruiter shirts that they give me. But yeah, so a lot of my time is spent doing training or on activation with the Guard, and it took me out of my job a lot as far as my civilian career with Transamerica. I'd be in and out of the office, still trying to help people with their financial planning, but a lot of times not even able to answer my phone to do so if I'm gone, depending on where I'm at, what I'm doing. So towards the end of the year, I kind of realized that it would be a lot easier to have more control over my own company. And not only that, but this allows me the opportunity to offer other products with other big time players in the industry, not just Transamerica. So as great as the company as they are, there are other great companies out there as well. So I wanted to have the opportunity to offer all of those choices to my clients. And so I just created this company literally last week. And this is my first video. I wanted to talk about how I created that company and the type of business structure that I did it under. This video is mostly about the business structures available to you for anybody who's starting a new business. This is an important aspect to kind of understand, and it goes much deeper than what I will and what I can even talk about, because I'm not a tax professional. I'm not a certified accountant, so there's aspects to this that I slightly understand, but don't understand well enough to try and impart to you as an average viewer. But as a layman, as a normal Marylander or Virginia or Delaware native, I wanted to explain the different options. And first option that's the most common is a proprietorship, sole proprietorship, or a partnership. So that's the first thing you have to figure out. Am I going to be going this alone, or am I going to be inviting in a partner with me? And obviously only you know if that's going to happen, but if you have figured that part out, going it alone really leaves you with only a few options after that. You're either going to be a sole proprietor, right, or you're going to incorporate. The two are very different in what they do and what they allow you to do. And the entire spectrum of business structure options really is covering a few things. How liable you're going to be for your business, how your business is going to be taxed, and how the business will be able to succeed upon your death, or basically how the continuation of your business once you're out of the picture. So sole proprietorship, again, is usually kind of the first option for anybody who is new into an industry, new into a company, new into a business, and is running and hitting the ground hard as far as startup costs and fees and getting their feet wet in that industry, or even just getting their feet wet with being a new business owner. I actually entered in Bay Life Brokerage as a sole proprietorship. I don't have any partners, and I did not want to incorporate. For many easy to explain reasons. So incorporating would involve a complicated legal structure that I'd have to hire a lawyer for, because essentially what you're doing is you're setting up a entity upon itself. So it's almost like creating a person, and not the traditional way of creating people that I've done twice in my life. I have the two beautiful kids. But it's a legal form of creating a entity that can then be taxed upon itself. So you are still financially in charge of that entity, but it is its own tax implications, and you're still, of course, being taxed as well. So this is a popular disadvantage of incorporating, is that you're essentially being double taxed on your income. The business is being taxed as a corporation, and then you are being taxed once you pay yourself. And that's going a little bit far down the rabbit hole there, but it is an important thing to think about. And so beyond the legal structure, the timeliness of it, like I said, I was kind of wanting to do this quickly, and the fees associated with it. There's already enough fees filing with the state and setting up my tax accounts and all that. So I had it with the fees. And a more important thing is, because I'm paying all these different fees and startup costs, a sole proprietorship will allow me to use those business expenses to deduct from my taxes, right? So I can declare those as expenses, and it's going to be a significant amount of expenses especially on my first year's return. And so I'd be missing out on those expenses if I just incorporated. So these are two important factors that I kind of kept in mind, but I had to research this first. I didn't just know this off the top of my head. Even though I'm a financial advisor and I'm in the industry, and I've been in the industry for a while, I had generally only worked with partnerships in the past. I had not worked not done a lot of tax implicative works before with clients. So what I mean is normally the reason why we are having you put in a financial plan or a life insurance plan for your business is because you are in a partnership, or because you are looking to get a loan. And so I understand those two things very well, but I've never gone into sole proprietorship and what that means, and I've definitely never gone into incorporating and what that means, because normally corporations have their own team of financial analysts and financial advisors that they staff to figure all those things out. They don't just bring in an outside person. So as a sole proprietor, you are responsible for all of those things on your own, and you get to take all the income from your business and declare it as your own income, and all the losses from your business and declare it as your own expenses and losses. And it's a very simple tax process. Not a whole lot to worry about. Incorporating is the exact opposite. You are literally doing double the work, and your corporation is taxed very differently from how you as an individual is taxed. And again, you need probably a team of accountants to figure out how to best go ahead and file under that circumstance. In the idea of a partnership, which I am not, but in the idea of a partnership, you're going to have two people who have figured out either they want to be both general partners, which is essentially two sole proprietors who have come together to create their own business. It's often 50-50, but it might be a different structure depending on what you have an agreement with your partner. But both partners, like a sole proprietor, are fully liable for their business. They're fully vested as far as how much they've basically contributed to it. So if it's 50-50, they're liable for 50% of the business's liabilities and debts. And so that means personally liable, not just the business, right? In a general partnership, they are both personally liable, just like in a sole proprietorship, the owner is personally liable. Very different from a corporation where only the corporation is liable. So again, I understand that I wasn't a partner, so this was easy to rule out for me, but I just kind of wanted to go over it real quick with you. The more popular form of a partnership you often see is either a limited liability corporation or a limited liability partnership. The two are different. The limited liability company is when you have members who come together and form a partnership, however, do not want to be fully liable for all of the debts, do not want to be personally liable for all of the debts and liabilities of the company. So they will be sheltered under a limited liability company tax form where they're only liable for what they've put up in investment, and all of the members get to manage or have a say in the business. So this is also somewhat difficult to set up. Not as difficult, but as a corporation, but somewhat difficult to set up. It's going to require you to probably consult with a lawyer and to pay some fees associated with that. So the limited liability partnership, it differs from that because the partners, they're only called members in a limited liability company. They're only called members. But the partners in a limited liability partnership, although they are liable for their investments, they do not actually get any management say. So there's only one general partner who is personally liable. There has to be one general partner. And then there can be associating other limited partners who get no say in the business whatsoever. However, they do get to share in the profit in proportion to whatever investment they put into that business. And then you kind of have a different breed called an S Corp, and that's basically a mix between a sole proprietorship or a general partnership and a corporation. An S Corp actually has some basically features of both. It'll allow you to take advantage of the taxing method, so you'll be able to use the profits as your own on your tax return. However, the S Corp liability is still full, right? So I'm sorry, it's not full. So the corporation part of it actually shelters you with the liability. However, you can only issue up to 100 different shares, meaning only 100 other people can be shareholders of your company or other owners of the company. And it gets much more specific than that. This is all a very general kind of overview of some of the main different types of business structures, but there's all kinds of others. There's ones that get very specific where you get professional partnerships, and those are like if we were all dentists or doctors or lawyers and started our own practice. There's family partnerships where it's designed just to have a business stay in the family. But every different structure has its own major pros and cons, and you need to be able to understand those pros and cons before you actually pick one. And of course, a big determination of that is going to be whether it's just you and your own business or if it's going to be partners. But once you go from there, there's so many different offshoots that can happen as far as different types of structure. You really need to do your homework. You really need to do your homework and understand the positive and negatives. Where I come in at as far as what Bay Life Brokerage does is between a partnership, oftentimes a partnership, once it ends with the death of one of the partners, a partner who wants to remain in control of the business has to buy out that partner's share. And so a lot of times we will put in what's called a buy-sell agreement, which is a life insurance plan that specifically covers the life of each partner so that the other partner can then use that money to fund the purchase of said partner's share of the company. So I've done a lot of those, and that is and that is almost my extent as far as involvement in the structure of businesses up until I actually had to choose my own. And I said, hey, this would make a great video trying to help people understand the differences as best as I can. And I'm sure that there are many other resources out there that can help you understand it better. I'm just trying to do it in a language that can kind of more easily be understood, because a lot of this is in legal writing and legal text. And if you're looking at textbook definitions of some of these, it can get a little confusing. You can get a little in the weeds with it. So in any case, expect more videos. I'm going to be doing probably once or two a week. I got all kinds of subjects I'd like to talk about. Economics is such a wide-ranging topic. This is actually very off-track topic. This has nothing to do with economics at all. This is more about my day job as a financial planner advisor. But if you have any questions, feel free to send me a email or send me a message. If you have the time, I'd love to get a like on the video and some support on the page. Thank you, and talk to y'all next time.